Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight it was another whipsaw market and also looking to the US dollar strengthening as the Australian dollar slipped back towards the bottom side of its range around 64.30-35. This week, the RBA minutes signalled no urgency to cut rates, with inflation still too high and policymakers remaining firmly on data dependent. Wage growth expected at 0.8% quarter and 3.4 year on year only reinforces the RBA's cautious tone. Across the Pacific, the Fed's October minutes revealed a sharply divided committee with no agreement on whether weakening labour conditions or stubborn inflation poses the bigger risk, or whether another December cut is even appropriate. With the 43-day government shutdown made matters worse, leaving officials without key data at a crucial time, all eyes will be on tomorrow's September non-farm payrolls. Now, the Fed's only meaningful labour reading before the December meeting, due to the fact that the Bureau of Labour Statistics cancelled the October non-farm payrolls entirely, which is now delaying the next jobs update until December 16 after the Fed's meeting. So with no fresh labour data other than the September non-farm payrolls, all hopes for a December cut have now disappeared. So it is a bit of a sticky one there. Nevertheless, turning to the technicals, we are seeing a bit of divergence here from the RSI. So let's see if we can see an improvement to the upside back to 65 to 65.5, or even still keeping the broader call to 66 cents. And as I mentioned, the base seen around 64.30-35. Turning to the euro, slips into the fourth consecutive day as the dollar strengthens, and all on the fact that many Fed officials view that the rate cut is likely not appropriate. Has put a bit of pressure on the euro, and now looking back towards the region of 114.65. Let's see if we get a correction soon and look back towards that top side of 116. With the US dollar strengthening after the Fed minutes, driving dollar yen to a fresh 10-month high as the market blasted above the rising wage ceiling, offering little sign of a top for now, and the squeeze continues. Though history remains that the yen reversals can hit fast and furious, so cautious remains essentially on this climb. As I mentioned, tomorrow brings the September jobs report, so that would all keep an eye, with 53,000 jobs added after August 22,000 jobs added. But with the Fed backdrop has shifted sharply hawkish, and the minutes show many officials view a December cut as likely not appropriate, the market will probably find a little bit of a tug of war as this squeeze continues. But as I mentioned, the bear market is fast and furious, and it can easily wipe out these gains, as we've seen in the past from these significant drops. Turning to sterling, the market was also weaker, and looking back to the base now around 129.65. Given the fact that we are close to an oversold and a mixed MACD, let's see if we can get a bounce soon. Finishing up with commodities, well, a little bit more of a positive side when it comes to gold, as it still holds towards a potential target of 4,100 to 4,200, and a base sitting now around 4,066 to 68 as a potential demand zone. Oil, well, giving back some of its gains as it hits that resistant trend, and now looking possibly to see demand return around 58, 80, 90, and then eventually I do expect to see this topside break around 60.40 to 60.50 and rally on to 62.5. Given the fact the technicals are still somewhat firm here, I'm not giving up the rally as of yet. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the day.